Great to be back. Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. Well, thanks once again to that subscriber stepping up because we're toasting with another little Tasmanian devil. Another number from the Uranium Beer Company. Let's have a look at it. This one's called Oxymoron, which I'm sure they drank with proud humility on the Apple Isle. Let's crack it. Oh, it's definitely full-bodied. Dark pale ale. Not bad, not bad. Tasmania's finest. Let's hope they win the Commonwealth Games and get into it. Because this week we're talking about my favourite topic, growth. We all know the market's highly uncertain at the moment, going this way or that. Who knows which way the ex-KGB agent's going to go? I want to show you how you can protect your portfolio with some small caps that are less correlated to the market, or which in the Australia's case is the All Ordinaries. Why is that good? Because diversification is your biggest weapon. Basically, that's the key to being able to weather any storm. And in Australia's market, that is so heavily skewed to the big resources and the big banks. You really need to look outside to look. Wait for it, under the radar. Let's have a toast. It's not bad. Not bad at all. Anyway, avid watchers of beers will know that I've mentioned PlaySide Studios a few times. This is a stock that's part of one of the fastest growth industries on the planet, gaming. Better still, PlaySide's exposed to mobile gaming, which is even faster, or gaming on mobile phones, which is even faster growth. What does this mean? It means that PlaySide can literally surf that demand, and has been. Consequently, the stock's flying. It's up fourfold in the past 6 months. We're glad to be riding it. Riding the wave. That's what Kelly Slater would have said. But let's face it, there is obviously a lot more price risk now in PlaySide, having increased fourfold. So what we're about it under the radar is looking at them before they get to that level, before they get those exponential runs. So we're after kind of ones where there isn't so much price risk. And one of the sectors I've been mentioning, and we've been talking about is uranium, which is of course the feedstock for nuclear energy. So nuclear stocks, they produced, for Under the Radar Report, they produced phenomenal returns in 2021. But 2022 has seen their stars fade a little. And it's led to some sort of, some significant falls. But Paladin Energy, for example, that's up 80% since we tipped it. But that was more than double, well over double, a few months ago it was well over double. Now it's up 80%. But basically, the uranium price been holding its ground in the past few months. But because it hasn't continued the big price increases that were in 2021, investors have got impatient, and so there's been some big falls. And I guess unlike other resource companies, or many other resource companies, the risk is exacerbated because many of these uranium miners, in fact most, the price of uranium doesn't make it economic for them to mine at this point. But as I keep saying, investing is about the future. Investing is about looking further ahead, because that's what you need to do when you're an equities investor or a stock market investor. So, one area that was brought to mind is iron ore. For years, iron ore traded $25 a ton, for years. And then in 2007, suddenly people saw and the effect of China's industrialization became apparent, it spiked and it hasn't looked back. I mean, iron ore now is over $100 a ton. And that is kind of what we're seeing happening in real time with uranium. Although, it could be exacerbated with an enormous supply squeeze, which means there ain't enough of it when that demand really gets to big levels. And why would it get to big levels? Well, it doesn't need to get to, the same level as iron ore for these uranium stocks to explode. That's the first point I'd like to make. But the point is it's already on the move. And these stocks are looking good value. I mean, yesterday, Origin Energy basically said we're not, we're getting out of this coal-fired plant 7 hours early. Like the stopgap solution for energy seems to be gas, but the gas price is motoring up. So the biggest boost for renewable energy is the increase in prices for fossil fuels. And what we've seen in Australia is that energy prices increases have led to loads of solar panels. But I guess the problem in Europe is that the sun don't shine much. But basically, as South Australians know all too well, a few years ago when they literally ran out of electricity, the wind doesn't always blow. These are the problems facing the world. COP26, we saw that solution emerge in uranium. So basically nuclear fuel. Nuclear energy is the only option for many countries to quickly reduce their carbon emissions. I mean, that's a fact, while maintaining energy consumption. So what do we like? We like uranium developers that can press the button quickly when the price gets to around $60 a pound, US $60 a pound. Right now it's around $44 a pound. But only in 2019 it was $25 a pound. So we think there's an inflection point coming in 2024-25, but these stocks will go well before then. So stocks we like to varying degrees include Paladin Energy, Boss Energy, and Bannerman Energy. Paladin, for example, has an existing plant that could be up and running within 18 months. Like Boss, potentially within a year, and Bannerman, well, that might take a little longer. But most projects in the world are simply deposits. So that's going to take them a number of years to get going. So there's that kind of window, which we've seen exploited in the lithium space by Pilbara, by Allchem, which is now called, previously Orocobre. So we've seen that gap exploited before. We've seen that movie, that movie could replay in uranium. What's coming up? Speaking of lithium, we've got a new developer we've got our eye on that we've been spending a great deal of time looking at, and now we're writing it up next week. And we're covering loads of stock with the reporting season well underway. So most companies' half-year results are coming out now, so that's exciting. Look, you need to be under the radar to get the good oil, or, in this case, yellow cake. Let's have another toast to the good oil or yellow cake. Thanks for joining me, Beers with Friday. I'm Rich, signing off.